We're live.
Come on now. How you feeling?
Hello, Chris. I'm doing good. How are you?
I'm doing good. A little bit under the weather, but the show has
Mhm.
to go on, right?
Yes, the show has to go on.
I'm
I'm
all
sorry to hear
congested,
that.
so I've been taking like stuff all for the last like 2 days on yeah, every single remedy you can think of. But it's almost out, so I sound a lot better than I did um earlier today, you know?
Oh, that's good. You take it's what allergies, sinus?
Yeah, I was basically this past weekend.
Okay.
Yeah, I shouldn't have been outside. It was like kind of chilly breeze,
Mm-hmm.
and I already had bad allergies, so yeah, I should have prepared a little bit better. Took a little bit more medicine, make sure I had my vitamin C and claritin D and all that good stuff.
All the good stuff.
So
All
what
right,
we
well,
got tonight?
I'm glad to hear you are feeling better. But tonight we have a great show for you guys. Tonight we're talking about insurance. We're going to
Yes,
actually go over life insurance and we're going to go over business insurance. I hope you guys are ready.
yeah. So actually, well, let's do this. So we got to start the show off right. So I'm Christopher Bush, financial advisor.
I'm Abby, your tax strategist, and
Hey,
let's
look,
get off the start.
no, you're good, good. Welcome to another episode of the Red Line, guys. I'm excited for everybody to be on the line. So let's go ahead and get started. Cue our intro, and we'll get into it.
That's 100. That's 100.
And we're back.
We back. Good deal. So you mentioned about that we're going to talk about insurance and all that good stuff, right? So as we were preparing for the show, and you guys understand, Abby, like we'll talk about the show, like what we're going to talk about before, and then when the show comes on, then we have like a totally different. No, I wouldn't say totally different, but new ideas just start popping up, right? No matter how much planning I do, there's always going to be some new ideas that pop up along the way. Does that make sense? You feel the same way, Abby?
Of course, that's exactly what we do.
Right. So I was so this I'm gonna try to pull this up real quick, Abby. Um, when we're thinking about like crafting, our show to help people implement things, right? Not
Mhm.
just talk about topics and just graze over them, right? We want to make sure that we're implementing some stuff, right? So
Absolutely.
what I thought about is that what if we kind of make this a financial health assessment, okay?
Okay.
Right. So what I mean by that is, right, when we're looking at crafting a plan and making sure our family's healthy, right, we kind of want to start with that foundation with the protection side. Okay.
Yes.
So when we're looking at protection, let me kind of see if I can share my screen real quick on some of these real quick. um, and we can kind of go into it a little bit, but I'll take it off the screen in a second. But let's see, share screen. We got, because now for you, I'll pull this up, Abby. So for you, what would you say from your side of the types of protection when we're thinking about the health assessment when it comes to protecting our families, protecting our businesses, protecting the way we do our finances? What kind of comes to mind for you? Like, talk to me a little bit about that.
Um, well, what comes to mind when it comes to protection, family wise, is always insurance, right? Growing up, I'll be 100% honest with you. My dad doesn't believe in life insurance. And he
Yeah,
used to tell us, he used to say, listen, I have three children and I will prepare for you guys. So he believes in real estate. That is the insurance that he believes in. So what he literally told us is that I have three children. I will build three homes. Each of you got, that's what I will leave you guys when I pass. So he wasn't an individual that believed in life insurance. But being in my generation, I believe in life insurance, and I believe in the idea that it's a protection for our family, and not just as an individual, but also as a business owner.
yeah. I think you made a good point. A lot of people, I guess even for me, my dad, right? So my dad does believe in life insurance. However, he didn't understand the importance of how much life insurance to have. And right, and this is not only a life insurance show, guys. It's just what we're kind of talking about first, right? But so he understood that we needed to have insurance. We've always had
Mhm.
that, right? However, in 2019, my dad was playing golf, and all of a sudden, he pretty much passed out on the golf course, right? So
Mm.
what had happened was he was actually had blood clots, right, in his legs, right?
Wow.
So he was in the rush to the hospital, right? And so he had us literally stay in the hospital for about a month just to try to get the blood clots under control, right?
Mhm.
So my family now, we have a decent amount of real estate. So that's how I kind of learned about real estate growing up. But my dad never taught me, right, about how powerful real estate was. I only knew about real estate, and I think I said this before, because I just had to go work, right? After school, after basketball practice, it was just, hey, look, you're gonna hang sheetrock. We got to go clean up the toilets. We got to go, do the plumbing. Like, we got to go hang up another roof. So it was just me working. So he never explained the business side for me of real estate, but he
Mhm.
understood that I needed to learn how to work hard. Does that make sense?
It makes
Right.
perfect sense.
So we have a decent amount of properties, but what happened in 2019 when he was in the hospital? That's when he realized, he's like, well, yeah, we have real estate, but see, if God forbid, and my dad was only dependent upon the life insurance policies that he has, well, if he passed away with real estate, great, but we would have to sell the real estate properties in order to benefit from it.
Mm-hmm.
Does that
Yep.
make sense? And so when
Yeah.
somebody passes away, the last thing that you want to think about is trying to sell properties, is trying to understand
Yep.
how we're going to offload this real estate. What if we're in the market like we're in now?
Exactly.
If you own a duplex, a fourplex, single family homes, if somebody passes away and you're saying, hey, look, this is the money that you can use when I pass, that is not a liquid asset.
And I'm glad you say that, because during COVID, my dad got a heart attack in his sleep.
Yeah.
And I think and he had open heart surgery. Thank God he's doing well, guys. He's literally back at his feet. And he had to put a PC in his heart. And my mom during COVID got cancer. So
Yeah.
that's when the word life insurance really got introduced into our family. And I would say in their generation side, like with me and my sister, my brother, we get it, but they never really got it. So when the word life insurance came up, which he's the one that came up with it, we were like, hey, listen,
Yeah.
looking at this premium at this point, and your condition, both of your condition, mom is going through chemo, you through heart issues, life insurance right now is something that we should have spoke about really, really, really 10, 15 years ago. So I can absolutely understand. And plus too, just like you said, if we do sell those properties, we got to go through capital gains, right? We're going to be taxing those. We got to start paying, we got to take some of that money to bury you. We got there's so much. So yes, life insurance, guys, for the month of May, we're going to actually bring it hard to you guys with life.
Yeah. So but let's talk. This is we didn't even talk about going over this, but you made a good point again, because I think a lot of our viewers, right? I think most of the viewers, let me know in the chat. But a lot of you guys understand that you got to be great in multiple asset classes in order for you to build wealth.
Yes.
Right. So what I mean by that is, if you listen to Robert Kiyosaki, cash flow quadrant, or the 4 asset classes, right? You got paper assets, you got commodities, you got a business, you got real estate, right? So I understand that you got to be good at least 2 asset classes minimum, right? You either got to learn how to have a bond paper assets portfolio, right? And you have a really good real estate business, or you have a real business that generates you income and you're great at paper assets. You have to have something, because when one is up, one other can be down. Yeah. Right. But you made a good point when it came to, like, because some people think, okay, I may not need as much insurance, or like my dad, he didn't understand how much he needed. But understanding with when you pass away, if you have rental property or a business, that's going to create a capital gains event. Life insurance is completely tax-free. Right. So yes, you may have a business. Great. Yes, you may have real estate. Great. But I tell people this: for every single property that you have, right, you should have a life insurance policy on that property for the total value of it.
And your mortgage. Don't forget your mortgage.
Right? Even of course, your personal mortgage. Yeah. Absolutely.
Absolutely.
Right?
I'm in agreement.
You got to have enough life insurance coverage. Yep. Say, look, even if this property is paid for, if it's cash flowing, again, when somebody passes away, they're transitioning. The last thing that you want to do is focus on how to liquidate the asset. That's why life insurance is so important. But I think that life insurance is the number one mostly purchased product in America. I would probably say almost in the world. Look, right?
I'm about I'm about to text my daddy and tell him to watch this show, y'all.
Come on, right? The number one financial product, right? The number one financial product that's sold, but it's also the number one most misunderstood.
Yep.
Right. And I think that we have to understand that, all these financial pieces, they all come together, but there's always going to be a need. There's different rules that we'll talk about, but let me kind of show you what I mean by a financial health assessment. Okay. And we'll kind of get into it. One second, guys. Right. And I'm going to expound on this, Abby, because I literally just thought about this as I was driving.
No.
As I was driving to, why isn't my window open? Okay. When I was driving back up to the office, right?
Definitely.
So check us out. So when I say a financial health assessment, and this is going to be, we'll have different types of sections, but this one that we'll call it is going to be our protection component. Okay. So, and this is not all of them because again, I was just jotting this down off the top of my head. But when we're looking at when we're looking at an assessment, okay, when we take an assessment of our financial health, the protection side, these are some of the things that's going to come up, right?
Yeah.
Number one, life insurance that we're talking about. So we got to understand what type of life insurance to have, right? At what point in our life, right? Based on our income. Right, because again, we see a lot of things on Instagram and TikTok now, right? Because you can make a bunch. If you're in the insurance game, you can make a bunch of money in insurance, right? And that's not a bad thing. But the only thing is you got to make sure that it's suitable for the client. But there's so many different policies, right? So we got to understand what type of insurance to have, right? What questions to ask, but also auto insurance, right? Yeah. A lot of people say, "Hey, Chris, I got auto insurance." I said, "What type do you have?" I got full coverage. Okay, full coverage is not a type. Right? Do people understand that? Like full, you can have 25,000, right? 50,000, that can be full coverage. You can have 15, 30, that can be full coverage. But if your liability limits aren't set, you can have full coverage, get into a wreck, and still have to pay out.
That's true.
Right? So see, I think we have to. I don't know if anybody talks. I mean, this is kind of boring crap, right? But people don't talk about understanding how to get a decent quote or the right type of quote from auto insurance. How do you set your liability limits? Right? Same thing with homeowners insurance.
Yes.
Right? If we're have a career or situation to where if we could not work today, right? Even in our capability, right? There's not many. We have our disability insurance. Abby, do you have disability insurance?
I have disability insurance through my life insurance.
Right. So with disability insurance, right? It's important to have
long-term care insurance.
You probably have a couple riders. We're gonna talk about that, right? So with that disability insurance, that's also pretty powerful too, because you got to understand, hey, God forbid something to happen that you can't work. Yeah. Right. You still want to have that income coming in.
That's true.
Right. So we got to understand, okay, what type of questions do we need to ask? Do we put that inside of our insurance policy? Right? Do we have that as a rider? Do we have a standalone policy? A lot of people probably have it through Aflac, right? Yeah. If you or Colonial, I think a lot of companies either do Aflac or Colonial, right? Most of the time with medical insurance, I think it's a bigger conversation when it comes to business owners, because if you have a job, they're pretty much giving you a standard type of coverage, and there's not too many variations, right? That you can get depending upon what the job offers.
Yeah.
Right. Long-term care, right? What you just talked about.
Yep. Long-term and short terms.
Right. We got our umbrella policy. Right. So we got to understand, okay, what is an umbrella policy? Right. Yeah. I think I didn't put short-term disability in here. I think I missed a couple, but I'm going to fill it up. Right. Umbrella policy. And then the biggest thing that covers everything is estate planning. And at the end of the month, Abby, I did lock down an estate planner for us. It's actually my personal estate planner. Sorry, guys. He'll actually be on a call on our last show to kind of go over the estate planning portion of it as well. It's going to be pretty powerful. Awesome. But one thing that I didn't talk about that people don't really put in that protection phase is that checking and savings, right? That's also a form of the protection when we're looking at a good health assessment, So I think that's I'm looking at it as from a personal and a family liability. Kind of talk to me, Abby, for you, what would you say from the business side or tax side? What would you think about?
Well, one of the things is a lot of time people get into business, but they don't think they need business insurance. Yeah. So when I first opened my firm, I think around like a year after I opened my firm, I had a partner. And if you have partners in your businesses, it's important to have business life insurance. So what that pretty much mean is that um if, let's just say, me and Christopher is in business together, if something happens to Chris, his wife, right, let's just say your wife now owns your portion of the business, so we need to have a policy to buy out your wife. So it's
Come on.
important to think of things like that as a business owner. It's important to think if something happens to you as well too, as a business owner when it comes to life insurance. So life insurance is not just for you as an individual, but it's also important to have to have a business insurance for your partner or whoever that you are partnering with in your business.
Good stuff. Now,
Yeah.
kind of talk to me. I guess where do you want to start tonight? You want to start with
Well,
what
when it
insurance
comes
you want to start?
we can actually continue with the different business insurance.
Okay, perfect.
So one of the questions that we usually get is, Abby, does the premiums that are paid in life insurance policy, are they typically a tax deduction?
Oh yeah,
And the
please talk.
answer is no.
Please talk about this because a lot of times people think that you can. Well, I'm gonna let you go ahead. Go ahead. Go ahead. This is good, right? If you can't make your life insurance a tax deduction, talk to me.
No. So, and again, I know you will hear other accountants, you will hear other influencers say to you, the best another way, to lower your tax liability is through insurance, not your individual life insurance. So the premiums that are paid in life insurance is not a deduction. It's not a deductible. Now if you as the policyholder
Is it now?
surrender.
Hold on. Wait. I
Mhm.
mean, so you said it's not a deduction, but
Nope.
can it be qualified as an expense of the business?
Yes, it can
Okay.
be. It can be a business expense. Now remember, on the when I'm talking about the life insurance part, that is not a deduction, is on the personal level. On the business side, because it's the business that is paying for the premium, it is a business expense. And when we talk about a business life insurance, I'm talking about me purchasing a policy in case my partner, right, is
Okay.
deceased. Now I can buy out the percentage. Let's just say my partner owns 50% of the company. So now I can buy out. I purchase a policy so I can buy out my partner from
So
that.
that
That's when that is a deduction on the business side, right?
right. So that would be like a key man or a buy and sell agreement. Right.
Correct.
And that part is important, guys. So
Yes.
think about it. So if Abby and I were in business together, right? Then let's say if our business is Abby, ANC and Associates, right? So the owner of the policy,
Ooh, I
either
like how that sounds.
right, we should probably create something, huh? Right? ANC and Associates, right? So ANC and Associates would be the actual policy owner of the policy.
Yes.
Right,
Correct.
the company would be the policy
Mhm.
owner. Now, the
Mhm.
insured, right, would
Yes.
be either Abby and I would have policies on ourselves, right? But then the
Yes.
beneficiary would not actually be an individual. The beneficiary would be the what,
It's the
Abby?
business.
It would be the
Correct.
business, guys.
Correct.
Does that make
That
sense?
is correct.
Right? So
That
people
is
don't understand the beneficiary has to be the business because it's again we're have a business liability together, and that's
Mhm.
what people got to understand. You can't just walk around and get
No, you
life
can't.
insurance on anybody that you see. You have to have an insurable interest. Okay,
Exactly.
so I just can't say, hey, look, I want to get an insurance policy on Abby, but now if we have a business together, now we have insurable interest because I depend upon her.
Exactly.
Right.
Exactly. And just so you guys know, I'm a tax strategist, but I do have my license, and Chris has it. They're like both have our license and insurance, so we do have an idea of what we're talking about. So another questions that I usually get is, if the policy the policyholder surrenders or cancel their life insurance policy, they may be subject to tax in any gains in the policy cash value. That's another thing people will say. Oh, you know what? I'm going to get an IUL, and I'm going to take some money out of the cash value, and it's not tax. Lies. It is tax because it's considered capital gains.
Yeah,
All right.
above the basis, right? And that's what
Correct.
Right, above if there's any gain above the basis, that does create a taxable event if
It does.
someone's were to surrender the policy. Right
Yes.
now, if you
Mhm.
keep the policy in force, while it's in force, of course, it's tax. It's a loan, right? So loans are tax
Correct.
free. But the
Correct.
minute that you try to surrender a policy, any
Mhm.
gains above the basis, and we'll kind of get into this. I'm gonna show some policies. That's one thing. Hey, Vic, put this up. Make sure you put this on the screen. Make sure people have our email address, and I really want you guys to do this because I want to show real examples, and maybe we can get somebody on the show
Yes.
that's in the comments to actually we can kind of go through the insurance policy together. Okay,
Yeah.
right? Because that's I really want to make it real. So if you can put our email address and stuff in our up that where you guys can email us um, your policy or your policy questions, so we can make sure we go through that. Okay.
Yes, definitely. Now, another thing too, in some case, like say you as a policyholder, you can borrow against the cash value of your life insurance without incurring taxes. However, if the policy lapse or surrender, the outstanding loan balance may subject to be taxed as well. So that's another thing that you will hear gurus or you will hear people say that no, you won't. You can be subject to tax.
Yeah.
Okay. Let's see what else.
We'll kind of talk about that. What type of tax would that be? That would just be capital gains tax, right?
Correct. Correct. Any gains, there would be tax and
Perfect.
capital tax. Yeah. So in the beneficiary side, life insurance benefits that is paid to the beneficiary are not subject to federal income tax. Okay, guys. So your life insurance benefit. So let's just say, God forbid, something happens to me, baby girl gets all of this money. It is not subject to tax.
Yeah.
Okay. However, if the policyholder has named their estate as the beneficiary, the benefits may be subject to estate tax.
And probate.
That's another thing they don't tell you. Exactly.
But put this is big too. I mean, we aren't even going over nothing that we talked about, right? But this again, I think people need to have a pen and paper on this type of stuff to really pay attention to what we're saying, because when you list again, even a child that's under the age of 18, right?
Yep.
You list them as a beneficiary. What happens, Abby?
Well, first of all, y'all better not list these children as beneficiary.
Yep.
I don't. But me personally, our trust is the beneficiary. Yep. But we'll talk about trust in another day. But usually it's best to make the trust the beneficiary. Your 18-year-old does not have the mindset to be the beneficiary of anything, because anything that is under a minor or even an 18-year-old, it goes straight to the state.
Yeah.
And you don't want that. You don't want that.
Right. So you got to remember this too, guys. When it comes to having beneficiaries on your policy, it's two separate ways, right? I really believe, number one, make sure that there's not a child, somebody over the age of 18, or a responsible party. Okay. Because there's a lot of times, again, I'm in the insurance business. I do insurance, actively every day. So what I know that a lot of times when I'm sitting down with clients, sometimes Abby, they don't have somebody to even who they want to leave it to that is of age, right? They don't trust a cousin. They don't trust a auntie. They don't trust but that's why it's so important to where you got to create that network of people that you trust. It just can't go to a child, right? It needs to go to some type of an adult, right? And even if you say this, even if you want it to go, how can I say this?
I have it. Like, we can use me as an example.
Okay.
I don't have
I'm gonna go. I'll try not to go too deep, but
no problem. So, all right. So I have it to where the beneficiary is the trust, and my sister, for an example, is a trustee. And then in my will, right? Yep. And this is why it's important to also have the will. In the will, it explains, even if she's underage, what it is that she can get at a certain time. So it's important, guys. Remember what in the beginning of our show, I said there's 3 people that you guys want to have in your speed dial. You want to have an accountant, a financial advisor, and you want to have an attorney. It's important to have that. Will actually help you build your wealth. You need these 3 people in wealth. So
So what I was going to say about that is that because sometimes some people may not, when they come to me, they don't have a trust set up, right? But they still have a child, right? So sometimes what I'll do is that, okay, well, let's make sure we have a responsible party and an adult as a portion of it, right?
Mhm.
And then you could have potentially like a your trust. You got to get that set up as soon as
Mhm.
possible. But you can say, hey, look, I only want a certain amount of money to go to this person, and they can at least handle the needs. They can handle the funeral expenses while everything else they can take care of, right? And that's where you're
Mhm.
saying the will's going to come into place, the trust's going to come
Mhm.
into place. It has to come together, right?
Yeah.
But even if you don't
Mhm.
have that right away, don't let that stop you from having insurance, right? We can always work the
Definitely.
beneficiary part out. Just don't list the kids, guys. You can't list the
Definitely.
kids.
No, one of the thing on our community in my Discord, Trader Tax 101, insurance was one of our subject a couple of months ago, and one issue that we constantly have in our community as a whole is how is we see so much of our brothers and sisters that are passing away, and we're having GoFundMe, or
Yeah,
we're selling t-shirts, or we're selling food just to bury them. That idea, we need to actually break that chain. We were discussing it in my community, and it was just so sad, to see how until now a lot of people do not have insurance,
yeah,
and it's something we definitely needs to change. But just to move forward, if your husband or your wife is the beneficiary, you also can be subject to estate tax. So on the tax end, it's important for you to know what type of policy that you have. Two, how are you taxed on it? Three, which beneficiary would actually be taxed on those policy. So depending on the state you live in, beneficiaries may be subject to adherence tax on the life insurance benefit that you currently have.
perfect, perfect. I got another little key. That's another little gem for you guys too. Make sure we're talking about beneficiary stuff, right? And this is so much stuff, right? Make sure whoever you list as a beneficiary knows that knows that they're the beneficiary.
Yes,
So
please.
did y'all understand? Did y'all understand that there is if you I wish I could Google it real quick, but there is so many claims that go unpaid primarily
Yes.
because insurance companies don't know who to contact. So if you did a life insurance policy and
Yep.
all you gave was your agent a name, right, a first name, last name, and a percentage, you pass away. How is the life insurance going to contact Abby? Remember, the life insurance company, most of them, some of them do. Okay, there are some insurance companies that actively, when they get a death certificate, they proactively try to go find the beneficiaries. But
Yeah.
typically, that doesn't happen right away. A lot of
No.
times, when I get phone calls of somebody passing away, it's because somebody knew that they had a policy with me, or they think they had
Exactly.
one, and then they called in. But so
Yeah.
the biggest issue is that most of you guys never have a conversation with the people that you list as a beneficiary to let them know their roles and their responsibilities, and that they're even a beneficiary on file, right?
It's
Where are you?
it's it's funny you say that, but one of the things that I do, and maybe your accountant or your financial advisor, or you could reach out to me and Chris, and we could help you with this. One of the things that I do is when we write a policy for a client, we usually recommend them to also see an attorney
Yeah,
to I'll say, you know what, now that you have your policy, I would like for you to see so and so. We use Jeff as our business attorney. I would say, listen, I need you to go see Jeff. I need you to actually put together an estate plan. I need you to put together a will. And then one of the things that and this is very important that you have, right, the copies, you want to have a copy on your phone in case something happens to you, right? You want to make sure you print out a copy and make sure whoever are the beneficiaries, they have a copy. So have
absolutely.
an electronic copy, have a paper copy, and have whoever you trust, or whoever is the person that's the trustee or the beneficiary, make sure they also have a copy.
Yeah, and it's also a cool thing, and one of my documents as well. Inside of our trust, when we do a full plan for a client, I actually have one of those intake sheets to where they make sure that they put their information on their life insurance, what number to call, what's the agent's
Mhm.
number, agent's email address, plus home office number. They make sure that they have everything in place, right? We
Yeah.
should not be scrambling, right,
No,
when somebody passes, right?
no.
It should not be something that, oh my God, I got to find out where grandma has it. And I think this is a conversation that us as African Americans, we don't have with our families,
Yeah.
right?
We
So
don't.
if you
Yep.
have, think about it, you got to make sure your parents, guys. I mean, I
Yep.
know some of our parents don't like to talk about these things,
We
or
don't.
however, However, you have to get into a place to where you can have a comfortable family meeting and talk honestly about, hey, God forbid something happened, mom or dad. What type of things are in place? What type of things will I need to do? Right? I think somebody mentioned in the chat about a like a burial. I don't really do burial policies only
Yeah.
because, again, it's really a waste of money most of the
But
time. Only if somebody is old and they can't get enough coverage, then maybe. But I think burial policies are one of a big ripoff, and we're going to talk through that when we talk about the different types. But I think we have to be able to have a family meeting, Abby, and help people understand what happens when somebody was to pass, what things are set up. We gotta do a better job at that.
we do, and I love what Shanisha said. If in the African American community, it's truly is something that hysterically we we are losing our brothers and sisters, our parents, our aunts, without having that conversation. And it's so hard to, it's a hard conversation to have, but it is a conversation that is necessary to have. Should I have that conversation with my 18-year-old, my daughter?
Absolutely.
And until now, it's so hard for my parents to have that conversation with us. Like we literally have to tell them, listen, do we need to contact the family attorney? Because obviously you guys are not telling us nothing. So I know it's a hard conversation to have, but just like you can sit down and have dinner with your family, when one of these evening, have that dinner and have that conversation, right after dinner.
Yeah, because they'll be surprised at what type of policies your mom and dad have. Like, they probably got them back in the 60s or 70s, and they probably have like $10,000 of coverage paying like $100 a month, right? $5,000 of coverage paying $90 a month, right? My very first death claim that I paid, Abby, when I was in the business, I've been in the insurance business since 2008, right? I've been a financial advisor. I got my first license within 2008 in insurance. My very first death claim wasn't until 2015. And that's when the business was real for me, right? I had a family. They were paying $96. I'm sorry, boom, $86 a month, right, for $10,000 of coverage. $5,000 on the husband, $5,000 on the wife. Literally 30 days later, the wife passed away due to stage 4 cancer, right? But he didn't. But if I did not come into the home, right, ensure the family properly, right, go through their policies. The actual policy did actually pay out. They only paid one premium, Abby. The policy paid fully out, right, and it changed his life, right? So those are things that are so important, understanding it. But I think that what we have to be real with today is, remember, guys, life insurance is not a financial plan. Life insurance is a financial product.
There you go. Say it again. Say it again, please. Say it again.
Life insurance is not a financial plan.
It's not.
Okay. Life insurance is a financial product. So what I mean by that is this: don't get swindled in understanding that, hey, this, again, I can make life insurance sound great, any type, but don't understand that it's not don't think of it like people, they say, oh, this is a Swiss Army knife, it does everything. No, look, you got to have something else besides that life insurance policy. Don't let the life insurance agent sell you on it's a retirement plan, it's a savings account, it's a borrowing account. You can buy it is not meant to do all of those things.
It's not.
Are there situations that it can do some of it? Yes. However, it's not a financial plan. Right. Make sure you're sitting down with somebody that not only has a life insurance license, but they also have an investment license as well. That way, you know that they can do the right thing for you. Right. One thing I hate is that sometimes people push them into a product and saying that this isn't an investment. No, it's not an investment. Life insurance is not an investment. If it was, you would have to have an investment license to sell it. You only got to You only got to have a life insurance license to sell life insurance.
Yep.
Okay. Right. So, I mean, except for, variable universal life, those type things, guys. But we got to make sense. We got to make sure we understand that it's a product, not a financial plan. Okay.
Yes. There you go.
Right. And I guess understanding on what did she say? She said about she said the amount of coverage, right? Let's talk about the amount of coverage that somebody should have. Right. Let's go from a personal standpoint. There's a couple of rules. What would you say, Abby?
With this economy.
Come on.
With this economy, I would say, based it on your budget, right? A person can have $1 million coverage. It doesn't necessarily mean you need to have $1 million coverage. And depending on what other assets that you have, you don't necessarily need a big, policy. I would say base it on your needs, your budget, and your desires.
Okay.
Just like Chris said, it's a product. So you have to see it as such, and you have to do your own evaluation to see what would be best, what would be in your best interest, not just for you, but for your family. It does help build generational wealth. It does. Life insurance will help at least not your current generation, but the generation to come may not have to go through what you have to go through.
Right. Well, I'm gonna put something on the screen real quick, just on that.
But if you think of it, let's just say I have a mortgage. I have.
I'm gonna do it for you. 1 second.
Okay.
I got you covered.
Do
So
it
this
for
now there's multiple different ways to help someone understand the different types of insurance, right? Or how much coverage to have. Okay. You could say there's a rule of thumb of like 6% of your gross income should be what you should be spending on life insurance. Or you could say, hey, look, you need to have at least 10 times as much life insurance coverage as you do income. Right? Those are simple plans. Okay. But understanding, guys, that's what we're talking about, Abby. It's also based about your budget, because I don't want you to, you can be making 50K and you want to have $500,000 of life insurance coverage because it's 10 times your income. But now if you're spending $300 a month on life insurance, but you're not saving in other places, that's not a great plan either. I don't want to make you insurance poor. So that's why it's crazy to where some people, again, that's why it's about the type of policy. They say, Crystal, which one's better? Should I get term? Should I get cash value, IUL, universal life, whole life, paid up? So it really depends. Well, it really doesn't depend on a lot of things, but I'm kind of biased on some ways because I'm big on the plan. But we're gonna get into it. But let's look at this first, right? There's some things that just like straight trash sometimes. But let's look at this, right? So this is one way that you guys can assess how much life insurance coverage that you need. Okay, this is a simple way. Yeah. Right. Go through this is what I call the dime method. Right now, there's multiple different methods. Okay, but this is called the dime method on here. So the D stands for debt and death. What that means is that look at how much consumer debt do you have right now, including student loans. Yep. Right? How much debt that you have, boom, we would put that number there, right? So let's say I got $20,000 in credit cards, I got $50,000 in student loan, boom, for my debt, I need to have at least $70,000 worth of life insurance coverage for that, right?
My policy that may not be enough.
Right? So if we look at like death, right? If we look at death, typically the average funeral, I was just talking to a funeral home director. Normally, today, if some people go elaborate, but let's just call it 25K. Right. So when we're looking at just that D column, you probably need close to about $100,000 of life insurance coverage just to cover that D. That makes sense? Right? Yep. So now the second thing is for income replacement. That's what I'm saying. Okay, we need let's say that I'm making $50,000 a year, right? That I'm going to have at least 10 times as much income or 10 times as much life insurance coverage as I do income, right? And that would be right $500,000. So now I'm already up to $600,000 of coverage that's I'm going to need on those two, right? So we got the D, we got the I. The next thing is a mortgage. What is the current balance of your mortgage? But if you also have more than we'll talk about, that's the business side. We'll talk about in a second. Your personal mortgage, what is the balance left on there? Or what is the current value of your home? What is the actual cost to replace it? Okay, I would just probably say the balance of the mortgage. Let's say I owe $250,000 on a mortgage. Right. So now I got $100,000 for the debt and death. I got $500,000 for income replacement. That's $600,000. Now I got another $250,000 for the mortgage. That's $850,000 worth of life insurance coverage.
Actually, you need $1 million at this point, y'all.
Right. Minimum. Right. But so now the last thing would be like education, or like, let's say an inheritance. Maybe you have young children. Right. You want to make sure that you have some set aside to pay for their education or leave some type of legacy or inheritance. Right. You have that dollar amount that you want to live with. So let's say I got 2 kids, I only have one, right? Let's say I got 2 kids, and let's say I want to leave $100,000 for both, right? So right now, just based on that illustration, guys, I need at least let's call it $1.2 million of life insurance coverage.
Correct.
Right? So see, that's how you determine your need. Yeah. But just because I'm saying this is what you need, now I got to think about, okay, what can you afford? That's why it goes into understanding the different types of life insurance, right? You got term insurance, and there's multiple different types of term, right? When you think about term, You got level term, you got increasing term, you got decreasing term, you got renewable term, you got convertible term, you got
Yeah.
paid up term. Like, it's so many different types of terms, but we'll go into that in a little while, right? You got whole life, universal life, variable life, index
Mhm.
universal life. Then there's also life insurances when it comes to trust. But these
Yeah.
are the 5 basic types. So see, some of you guys, the reason why our culture, Abby, right?
Yeah.
Why are we so behind financially? I think one of the biggest reasons is that our culture never really understand life insurance. Because we
Yeah.
always think about life insurance when it comes to burial, but life insurance is really for income replacement and leaving a legacy, not burial.
But I think probably the biggest for me is I think we think of now.
Yeah,
We don't think of future. We
yeah,
don't think of we don't think of after me. Like what happens after me. Especially our children or especially those who we love or care for. I think the culture needs to get to the point where we're not just seeing us and we're not just seeing current us, but like when I think of me, I don't just think of me as present, but I think of me coming from my daughter, from my daughter's children's, her children's. So there, I believe in generation. So when we say the word generation, part of generational wealth has to come. It has to start at least with life insurance. Yes, we do need. Yes, I can. I be 100% honest with you. The first bill that gets paid every month is my life insurance.
yeah, absolutely. My dad always used to tell my mom, you can cancel all the bills if you want to, but one bill that you don't cancel is that insurance. You know what I'm
Exactly.
saying?
You
Right.
don't
And
cancel that
that part is
insurance.
huge. And I think that's where, when you understand how much coverage that you need, then back
Mhm.
it down about how much you can afford, it's going to gear you into the type of coverage that you should probably have. Now, for as a foundation, I really believe that as a foundation, right? And overall, people need to have term insurance. Why? Because it's cheap and it's affordable, right?
Yeah.
Because if you try to get $1 million, if somebody's, let's say 40 years old, they try to get a whole life policy for like $1
Yeah.
million, they're spending $800 a month.
800.
I mean, that's on the low side, actually. Probably a little bit more. I should have done a quote. I'll do a quote next time,
Next.
right? Right? It's probably gonna be more than that. So you got to understand, yes, they talk about having a whole life, universal life, all these cash value policies, but
Mhm.
understand that's a commitment that you got to keep up.
Yeah.
Right. So
Yeah.
that's why I'm big on, look, I need to have a lot of insurance now because God forbid something happened tomorrow
Oh
while I'm
yeah.
trying to save up money. Right. And my insurance needs to pay out.
Yeah.
Right. But so over time, I should have more money in life insurance that I'm sorry,
Mhm.
more money in my investments than I do have in insurance. But let's say if you want to have insurance forever, that's not a problem.
Yeah.
Right. Because now I can take the dividends from my investment account, Abby. I can let that pay for my life insurance policy. So it
That'll work.
doesn't have to come. See, if you have an investment plan, a financial plan, when you retire or get older, that money doesn't have to come out of your personal pocket. You should have an investment vehicle, a true investment, that are able
Mhm.
to kick off dividends to pay for those type of fixed expenses if they start to rise over time. See, that's
Correct.
how a financial plan gets built, right?
Correct.
But we're so focused on borrowing money from a policy. Again, I'm not.
Yeah.
I'm not. I'm going to go over ways that stuff can work. I'm not going to say that it's completely horrible, but for most clientele, Abby, it just doesn't
Yeah.
make sense,
It
and
does.
or it doesn't fit in their plan yet. And
Yeah.
I think
I
that's why
mean,
people having
it
trouble.
doesn't necessarily mean. Okay. So IUL is not a bad policy. It has its purpose and
Yeah,
it has
absolutely.
its clientele.
Yeah,
So just I think what issue is that I think what happens is that we have made IUL to be a bad guy. IUL, Index Universal Life, is not a bad guy.
yeah.
It has its clientele. It has its purpose.
Yeah, I think every financial product has its purpose, and that's what we want
Yep,
to help people understand is
correct.
where does it fit in? And I think that's
Like
where
your
I think that's where I
situation
had
and
the
your
problem with the
correct,
misinformation is how it fits in, right? Because
correct.
let me give you an example, right? So I was talking with somebody, and some people are going to hate me talking about this, but it is what I just want to speak the truth. When we're looking at ways to leverage money, okay, let's say if you did make enough money and you said, well, Chris, I do want to use a life insurance policy as leverage, okay, you know, you can use like a securities backed line of credit, right, to say, hey, look, I don't want to. This is how people borrow money, right? They say, hey,
Mhm.
look, I can use a securities backed line of credit for my investment account, meaning that I can have, let's say, $1 million in my investment account, and let's say I want to go buy real estate. Okay. Instead of me withdrawing 250 from my investment account to go buy the real estate, I can take a securities backed line of credit off my
Yeah.
$1 million. That money in my investment account still does what?
Well,
It still grows, but I still have access to the 250,000.
Correct.
right?
Well, I
Great.
don't believe using my own money anyway. So
Right. No, but follow me. So that's one strategy. However, securities-backed line of credit is not good in this environment, in this economic environment, because
correct.
now your interest rates
It's
rise.
high. Mm-hmm.
Right? If you would have looked at last May, right,
Mm-hmm.
last April, May, you could get it like from M1 Finance, right? From M1 Finance, you can get a securities-backed line of credit for off your portfolio up to like 70%, I believe, for like 2%. But
Wow.
now those same rates are like 6%. So see, in that type of environment, it would not be great. In this type of environment, it would not be great for us to pull
Correct.
money, right, from doing a security-backed line of credit now. So maybe if you did have a cash flow banking policy or infinite banking policy that's built correctly, that it fits
Mm-hmm.
your actual needs, that maybe since that's a fixed rate, that you could borrow from that policy. You see what I'm saying? So it's about how you use the tools, right? And I
Correct.
think that most of the time when we're hearing things on Instagram and social media, a lot of times we're using the tools incorrectly for the
Correct.
wrong person.
Yeah, and sometimes too, and again, it's not like the information is wrong. It may not be aligned with your situation. This is why it's so important to speak with a financial. It's important to speak with a professional. So it's okay to hear information and it's okay to obtain information, but it's also your responsibility to do your DDs. It's your
Yeah,
responsibility to do your due diligence. It's your responsibility to do your own research. And I say it just like I say it to my clients, just like your money is your responsibility for you to actually run it and control it and manage it. So
yeah,
you have to take the responsibility in doing your own research and see how what you have, the research you have done, how it's aligned with your situation, and
yeah.
then sit down with somebody so someone could put together a plan that is aligned with you, your goals, and what it is that you want. I know that May is going to be a very great month because this is just the beginning of us dissecting life insurance for you guys and bringing you guys the best information that you guys can do your own DDs and see what would be best for you guys. So we will dissect term life insurance, whole life insurance, universal life insurance, variable life insurance, index. We're also
And I'm
going to
and
talk
I'm and I
about
want and I'm
business
gonna
insurance.
Yeah, and
Yeah,
I'm going to show illustrations on when it fits for certain types of people. Okay,
perfect.
like and how and what the real situations are, right? Because again,
Correct.
like sometimes if somebody is like 70 years old, I'm not a term policy not going to work. You know what I'm saying? Right,
Mhm.
right. I'm probably going to have to get some type of whole life policy, or maybe somebody has diabetes or on like 20 different medications. I probably
Mhm.
they may only can use a graded policy, right? It's just so many different types,
Correct.
guys. And if you're sitting down with an experienced professional, they should be able to chop that up with you. Okay. And that's when I think probably out of everything, well, I wouldn't say that. I'm a beast when it comes, I will say that, Abby. I'm a beast when it comes to life insurance.
That's
Right.
good.
It's
Yeah.
there's not too many things that I can't answer when it comes to a life insurance policy in all types and how to break it down in real scenarios, because I want to take somebody's entire life to bring it together. So I'm excited about
That's
this
good.
topic over the month.
Very good. Awesome. We're also going to discuss, you guys, business insurance, general liability insurance, property insurance, business interruption insurance, professional liability insurance, workers' compensation. We're going to go over cyber liability insurance. So I'm really excited for this episode, and I'm very excited for the month of May and how we are going to dissect insurance for you guys. I know a lot of you guys have been asked, how can you get a hold of myself, or how come you get a hold of Chris? I am always in my community or Discord. If you do use Discord, it's Trader Tax 101. You can also email us any questions that you guys may have, when we will definitely answer it here live for you guys.
Yeah.
I know a person that did ask me a question. I promise you I will answer that. I will get that question answered for you. You can go to help at thecomeupseries.co. Whatever question that you may have for Chris and I, we will definitely get that answer for you guys. Thank you guys so much for showing up tonight. Do you have anything else that you want to cover, Chris?
No, I mean, again, it's like you said, I just want to encourage everybody to reach out to us. If you hit my Instagram, shoot me a message, or I have a link up there if you guys have questions. But I really want to get some valuable feedback on the life insurance side, because I want to bring up real scenarios. So because I think me just talking, us just talking about the different types, we really need to help people with scenarios on their current situation, on what works for them. That way,
Yeah.
people can get a more of idea. Okay, well, if I'm making $50,000 a year, I can pretty much say what product to have. If you're making $100,000 a year based on your debt to income, I can probably tell you what product to have. If you're making over $250,000, I can probably say, okay, what things we need to have, right? Because so, and I think that's the conversation that will help and really change some people's lives on how they utilize things. If they understand, maybe I can tie it to an income bracket and a financial plan. Maybe that's a simple diagram that I can really make to help people know when to talk about the different types.
Awesome. And Shanisha is a queen with life insurance. So Shanisha, definitely, we will actually, Shanisha said, let her know if she can add any value in the topic. She is the insurance queen. Shanisha, definitely. Awesome, guys. You guys are very welcome. Thank you so much for showing up tonight. Chris, I hope you feel better. We will see you guys next Wednesday, 8:30 p.m. Eastern time. I'm Abby, your tax strategist.
I'm Christopher Bush, your financial advisor.
And thank you for joining us in the Red Line. You guys have a great night.
Take care.